Hey guys, everything new under the sun here. Here's some banking news. This is from express.co.uk. EU on brink of terrifying crisis. Five of Europe's big banks are in danger, warns experts. This is just more confirming evidence that EU is in real trouble. The article starts getting into talking about Mario Draghi gonna print some more money, basically. Some of Europe's biggest banks are on the brink of for a crisis that echoes the 2008 meltdown, a finance expert warned, as fears over a global economy escalate. Now, I think it's way bigger than 2008. It is way bigger because they owe so much more money. Deutsche Bank, Credit Suisse, Santander, Barclays, and RBS are among the stocks that are falling sharply, sending shockwaves through the financial world. This is happening according to a former hedge fund manager and ex-Goldman Sachs employee, Raoul Paul. At the height of the financial disaster in 2008, the government was forced to step in and rescue Lloyds banks and RBS from liquidation, while the European Central Bank gave huge bailouts to Spain, Greece, Portugal, and Italy. This is going to recur all over again. They're going to have to do huge bailouts again, and they've even already put in the legislation for bail-ins. They implemented that at the beginning of January this year. It went into effect, and now instead of simple bailouts where the government prints a bunch of money and pays banks' bills, pays their debts, they can now bail in where they take a portion of all the depositors' money. So if you have $100,000 in the bank, they're going to take 20% off the top of it, or whatever the numbers are. They're going to actually take your money to pay for the bank's bad financial situation. Last month, the head of the European Central Bank, Mario Draghi, raised expectations that could undergo yet more quantitative easing in March. So this is coming up, in effect printing billions of pounds worth of money in the face of ongoing economic fears. Now, what does this do? They can't keep printing money out of thin air. Eventually confidence is going to be lost in the euro and in dollars all over the world when people recognize they're just inflating the money supply so much that the value of each and every dollar is decreased because this isn't backed by anything. They're just printing money out of thin air, and this is going to cause massive inflation. But for now, apparently the Eurozone can get away with it, and people are fine. People don't recognize what's occurring. They don't recognize that their euro or their dollar, whatever, is getting worth less and less every single day, every time they print more money. France last month declared a state of economic crisis. Did you know that? Adding to worries about the stability of the Eurozone. So they're in a state of economic crisis, and of course, France is at war with ISIS in the Middle East. And when the economy crashes, often what happens is a war starts to deal with it, or to cover it up, or whatever, to make wars are great for improving economies, as has happened in the First and Second World War. Regulations now require banks in Europe to hold more cash as a buffer against market shocks. So does that mean that if they put these regulations into effect, do they know that there's going to be some shocks that are coming? And I think the answer would be yes. They probably have an idea for what's occurring. So that is news out of the Eurozone. The pundits' comments as a number of bank shares plunged to their lowest level for years. Speaking of the video that was just there, the Chancellor George Osborne has been forced to push back Lloyds Bank's retail sale after shock value plunged too far. Again, I'll say it again: if you're in the stock markets right now, you should have been out. Mr. Rath told CNBC, "I look at the big long-term share charts of them. I think this looks terrifying indeed. I have not seen anything like this for a long time." These are sobering statements by these people. Pause the video and think about the statements that are being made here. Negative rates are something the banks cannot deal with, and that's being priced into shares quickly. Priced into shares means that the economy, the shareholder, the traders, the stock markets recognize something is coming. They recognize negative interest rates are coming. But he's saying that negative interest rates are bad for the banks. and he's stating it as if it's coming as well. Fears over low oil prices and China's slowing economy, tumbling stock values at the start of the year were driven by investors selling off oil and mining companies. But now, he says, the panic has spread into other sectors. And Mr. Powell said banking issues could be an even bigger worry than China's growth slowdown and cheap oil. This is true. You've got banks in the Eurozone ready to collapse. They're ready to start doing bail-ins, taking the depositors' money, taking your money if you have it in a bank account. They're getting us all primed and ready for negative interest rates. And the stock market apparently recognizes that negative interest rates are coming, and that they're coming shortly because they're pricing it in already. So this is almost a big tell of a story from express.co.uk. If it's correct, the stock markets know that a crash is coming effectively, or at least that massive strong arm measures are coming to prop up the economy to prevent it. Money printing and negative interest rates and bail-ins to prevent these too big to fail banks from collapsing. This is a key article here. Read it over, go to express.co.uk. The economy is doing very, very badly. Don't let anybody tell you differently. The U.S. passed $19 trillion in debt just a couple days ago, I think, or whenever that was. And this is debt that cannot be paid back. It's going to turn into a war effectively, and all prices will have to, the whole bubble will have to come down. All prices will need to equalize. The market will need to equalize back down to a true value for each and every country's currency. And because it's not backed by gold, we're going to see massive, massive trouble, massive losses. Gregory Mannarino would suggest it's going to lead to a massive loss of life indeed, and this is going to be one of the biggest events in our lifetimes. These are big things happening, and this is all prophetically significant. This all leads us to the 7-year tribulation. And watch my video tomorrow where I do, Sunday, where I'm going to do a timeline of the return of the Lord, and I think it'll be quite interesting for the timeline to see how close we are there. And I may or may not be right, but I think this ties into all the economic troubles. So watch for that, a bit of teaser. Thanks for watching, guys. Please subscribe if you appreciate the information, and I'll see you on the next video.